Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 8th of June 2020, and today's video is a little later than usual as we're producing it at 20:50 hours GMT plus 1. But first we wish to draw your attention to the video we produced yesterday, which we believe to be of some interest, especially in relation to the future economic prospects of China and how it may indeed lead the world into economic recovery. It's entitled, Is China Still the Future? Now today we wish to provide a brief update on how equity markets and precious metals have performed, but first we'd like to read an article published by Bloomberg on the World Bank's estimates of how we can expect our various economies to progress over the next 12 months or so. This is what the World Bank has had to say. Bloomberg article dated June 8th, 2020, headline, World Bank sees EM economies, that's emerging market economies, shrinking for first time since 1960. The global economy will contract the most since World War II this year, and emerging nations' output will shrink for the first time in at least 6 decades due to the COVID-19 pandemic, reducing incomes and sending millions of people into poverty, the World Bank said. Global gross domestic product will probably shrink 5.2% in 2020, the Washington-based development organization said in its semi-annual Global Economic Prospect report Monday. Emerging and developing economies will shrink 2.5%, their worst performance in data that starts in 1960, it said. Per capita output will contract in more than 90% of countries, the biggest share since 1870. This decline may push 70 million to 100 million people into extreme poverty. The World Bank's Vice President of Equitable Growth, Finance and Institutions told reporters by telephone. The forecast for a global contraction compares with a January projection for a 2.5% expansion and will be the 4th deepest recession for the past 150 years after 1914, 1930 to 32, and 1945 to 46, the World Bank said. This is the first recession since 1870 triggered solely by a pandemic, and it continues to manifest itself. Given this uncertainty, further downgrades to the outlook are very likely. Advanced economies will shrink 7%, led by a 9.1% contraction in the euro area, the lender said. Emerging economies with limited healthcare capacity, deeply integrated global value chains, heavy dependence on foreign financing, and extensive reliance on international trade, commodity exports and tourism are likely to be the hardest hit. The economy will rebound in 2021, growing 4.2%, the lender said. While the World Bank sees China's economy eking out 1% growth this year, the lowest rate since 1976, it forecasts India's will shrink 3.2%. US GDP may contract 6.1%. 2 scenarios. The World Bank presents 2 alternative scenarios. In one, where the COVID-19 outbreak persists for longer than expected, requiring the continuation or reintroduction of restrictions on movement, the global economy would shrink almost 8% this year. If control measures can be largely lifted in the near term, the contraction would be 4%. Still, more than twice as deep as the global financial crisis of 2009. The global recession would be deeper if bringing the pandemic under control took longer than expected, or if financial stress triggered cascading defaults, the World Bank said. Now, the International Monetary Fund will update its World Economic Outlook on June 24. In April, the fund forecast a 3% contraction for this year, though chief economist Geeta Gopinath has since said that the outlook has worsened. The methodologies are different because IMF aggregate forecasts are based on purchasing power parity, which gives more weight to developing economies, while the World Bank uses market exchange rates. Most central banks have cut interest rates to about or below 0 to buffer the effects of the coronavirus, with the Federal Reserve starting an unprecedented range of emergency programs, providing as much as $2.3 trillion in loans. Fiscal stimulus packages have varied. The US is providing about 15% of GDP in support, and Germany about 4.7%. while Japan's program is worth about 42% of GDP, according to Bloomberg Economics. End of article. Okay, so 2 scenarios. Really, each of them, or either of them, not particularly optimistic about global growth over the next 12 months. So let's just take a look at how equity markets have responded today. Well, European and UK markets closed broadly flat, or marginally down, by no more than 0.5%, even though we saw Asia markets close up by around 1% overnight. US markets are not closed as yet, but we can see the Dow Jones is up 1.3%, the S&P 500 is up 0.75%, and the Nasdaq is up 0.9%. Quite reasonable gains, bearing in mind how European equities have behaved, and appears at least to be a continuation of last week's upward market trend. Oil prices generally have fallen back a little, with Brent and WTI crude falling by $1.42 and $1.29 a barrel respectively. Now the dollar has weakened further, and the index, the dollar index that is down 0.30 to 96.63. Now gold originally opened down this morning, but smartly recovered, and stands at $1,700, although it's vacillating between $1,699 and $1,700, up just over $14, and silver did likewise and is currently up 34 cents at $17.79, back within our 1750 to 1850 range. Now for those who follow the other industrial precious metals, platinum is up $14 at $845, and palladium is up $61 at $2,027. Now we really should look at platinum at some stage in the near future, and we will produce an additional video on this subject. Now for cryptocurrency fans, Bitcoin is up $80 today at $9,739. Now, we do not wish to make too much of today's price moves or market moves because, as we stated in our weekly update on Saturday, much attention will actually be paid to the FOMC announcement on Wednesday and Fed Chair Jerome Powell's press conference after it. So we are expecting markets to hover both up and down a little before this happens, trying to assess what the chairman is likely to say. Now, as far as precious metals are concerned, focusing on gold and silver, we still expect a degree of range-bound performances, unless, of course, some unforeseen geopolitical event occurs. Now, interestingly, on the political front, with the exception of one outlying opinion poll in the United States, it does look at this moment as if Joe Biden is the favourite to win in November, and he has today succeeded in becoming the Democratic Party's official nominee. Now, of course, much can happen between now and November, and so nothing can be taken for granted. However, what will be interesting for us is to view how the markets react whenever the interplay between these two fellows move or change in one direction for another. It will be quite telling over the course of the next few months to see whether Trump or Biden is the market's favourite. It is actually quite difficult to tell at the moment. Meanwhile, we shall watch tomorrow's US economic data, which includes the NFIB Small Business Index for May, plus wholesale inventories for April. Having said that, the May Consumer Price Index figures, which will be announced on Wednesday, are likely, to be frank, to be of more interest. Now that's it for now. Thank you so much for listening. And if you haven't already done so, we would appreciate it if you would subscribe to this channel and press the bell sign so that you're notified of our videos as and when they are published. Meanwhile, by all means, do comment and share your thoughts beneath our video. And if you haven't already done so, kindly pop over to our Richard and Greg channel, which we shall be updating at some stage tomorrow. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.